which way energy markets are moving. This is a critical story, Michael, as we sit back and take a look. Navigating through July 2025, the global energy landscape continues to evolve amid economic uncertainty, policy shifts, and fluctuating demand from traditional fossil fuels to emerging renewables. Michael, I had my head, what little hair pulling out on this one, and it is a lot of fun. Quarterly investments hit a post IRA low of just 5 million in Q1, down from a peak of 157 million in Q3 of 2023. This downturn is to policy reversals, and people are sitting there going, well, wait a minute, which way is Trump's tariffs going to go, left or right? Which way? Trump, no, this, that. And I think Trump is now proving to the world that tariff negotiations are actually a good thing. And aluminum, as I used to say when I was 3, a key material and energy infrastructure from solar panels to electric vehicles, is grappling with oversupply and subdued prices in July. I did not see that one on my bingo card. Price remains in the doldrums due to a supply gut with expectations of short term. So, don't day trade it. But Michael, I did not see ethanol. Ethanol, biofuel stables showed mixed but generally positive momentum in July. I've written several times, Michael, on our Substack, get rid of ethanol. It's bad. I don't want to, it's like, holy smokes, it's bad for cars, bad for the economy, bad for everything else, but it showed up in the what to invest in. I'd go figure that one out. Yeah. But refineries, oil and refinery margins, Michael, you talk about this a lot, fell with U.S. utilization dropping below 90% in mid-January to 86%. And I put in a graph in here from Bloomberg. It was pretty interesting when you sit back and take a look at Europe to U.S. drive oil refinery closures. We've got 20% of California coming up to close. There's a couple other closures that are also big in here. That's going to really exacerbate the whole problem. And yes, I said exacerbate. That's a big word for me, so don't fall out of your chair yet. But in the natural gas market, prices are volatile, gaining ground in July, driven by heat waves and demand. They rose to 357 per MBTU. And right now, at the time we're recording this, they're at 3.29. So that's pretty interesting.
Yeah, absolutely. I do think, we also are going to see residential pricing from an electricity standpoint drop down to about $12 per MCF, which is about 22% drop relative to an inflation adjusted number. It's a lot of what's going on with natural gas has to do with the summer season right now. It's a lot harder than we expected. I think it's clear, Stu, as you said in your conclusion, the energy markets are diverging. Clean energy developers in the United States are contracting sharply. We know aluminum is facing massive pricing pressures amid a massive surplus. Refineries, while we've seen a short-term margin boost, like you said, the long-term effects are going to be very interesting. So I think this was a great breakdown on where the energy is moving. Again, it's clear you don't want to be in the clean energy sector.
No,